You passed level 1. You crushed the demo. You were convinced this was your time. And then you blew the funded account in 3 days. Sound familiar? Here's the truth. Nobody in the prop trading space wants to say out loud. Most traders don't fail because the markets are rigged against them. They fail because of a handful of predictable, fixable mistakes that they keep repeating over and over again. And today, I'm going to walk you through exactly what those mistakes are. So you're not one of the let's start with some cold, hard reality. Studies across major prop firms consistently show that somewhere between 80 and 95% of traders never pass their challenge. And of the ones who do pass, a significant portion blow their funded account within the first month. Think about that. The majority of people paying for these challenges, sometimes $200, sometimes $600, sometimes over $1,000, never see a single dollar of profit sharing. So what's going wrong? Is it the rules? Is it bad luck? Is it the markets? In most cases, it's none of those things. It's the trader. And that's actually good news, because what a trader does, a trader can change. Mistake number 1, no real edge. Here's a harder truth. Most traders who attempt funded challenges don't actually have a proven, back-tested edge. They have a collection of YouTube strategies they half understand, stitched together with hope and confirmation bias. An edge isn't a moving average crossover you saw in a video. An edge is a repeatable, statistical advantage in the market that you have tested across hundreds of trades in multiple market conditions. Do you know your win rate? Do you know your average risk to reward? Do you know what your strategy does in trending markets versus ranging markets? Do you know which currency pairs or instruments it performs best on? If the answer to any of those is not really, you are not ready for a funded challenge. You're just making a donation to the prop firm. Before you spend another dollar on a challenge, spend 30 days doing one thing, journaling every single trade. Your entry, your exit, your reasoning, your emotion, the outcome. After 100 trades, patterns emerge. That's where a real edge lives. Mistake number 2, poor risk management. Even traders with a genuine edge blow funded accounts because of this one thing. They don't respect the rules of the game. Prop firms don't just care whether you're profitable. They care how you're profitable. And the 2 biggest rules, daily drawdown and maximum drawdown, are violated constantly by traders who are otherwise skilled. Here's how it usually happens. A trader risks 2% per trade, which sounds responsible, but they take 5 trades in a single session and stack losses. Suddenly they're down at 8% on the day and they've hit the daily drawdown limit, account blown. Or they have one catastrophic trade. Maybe they held through a news event, maybe they averaged down, and they wipe out 10% in a single move, account blown. The solution is a personal hard limit that is tighter than the firm's limit. If the firm allows a 5% daily drawdown, your personal limit should be 2 to 3%. If the firm allows a 10% maximum drawdown, never let yourself go below 6 or 7%. Give yourself a buffer. Treat those personal limits as non-negotiable. And for the love of everything, do not trade major news events unless your strategy is specifically built for them. Mistake number 3, emotional trading. Trading psychology isn't a soft skill. It is the skill. The single biggest destroyer of funded accounts isn't a bad strategy. It's a perfectly good strategy executed by an emotionally compromised trader. Revenge trading after a loss. Overtrading because you're bored. Cutting winners short because you're scared. Holding losers too long because you can't accept being wrong. These aren't character flaws. They're human instincts. But in trading, human instincts will bankrupt you. The traders who stay funded long-term have one thing in common, a process-based mindset. They evaluate themselves not on whether a trade was profitable, but on whether they followed their rules. A losing trade taken correctly is a good trade. A winning trade taken recklessly is a bad trade. It just happened to work out. Develop a pre-trading routine. Meditate, journal, review your rules, whatever it takes to show up neutral, and build in a rule that if you hit your personal daily loss limit, you close the platform and walk away. No exceptions. Mistake number 4, choosing the wrong firm. Not all prop firms are created equal, and a lot of traders set themselves up for failure before they place a single trade by choosing the wrong firm for their style. Some firms have aggressive daily drawdown rules. Some have trailing drawdowns that move against your favor as your account grows, meaning the better you do, the harder it becomes to hold the account. Some firms restrict trading during news. Some don't allow overnight holds. Some have minimum trading day requirements that force you to overtrade. Before you pay for a challenge, spend an hour reading the rules, all of them. Then ask yourself honestly, does my strategy fit within these rules? If you're a swing trader, a firm with a 5% trailing drawdown is going to destroy you. If you trade news events, a firm that restricts that is going to cost you your best setups. Match the firm to your strategy, not the other way around. So let's bring this together. Most traders never get funded, not because getting funded is impossible, but because they show up underprepared, undisciplined, and misaligned. They trade with the wrong mindset. They use unproven strategies. They ignore risk rules. They let emotions make their decisions. And they choose firms that work against their style. Fix those things, and you are already ahead of the vast majority of people attempting these challenges. Getting funded isn't the finish line anyway. It's the starting line. The real goal is building a track record that creates consistent income. That takes time, humility, and the willingness to treat this like a business, not a lottery ticket. If this video helped you, drop a like. It genuinely helps this channel reach traders who need to hear this. Subscribe if you want more content on prop trading, risk management, and trading psychology. And comment below, what do you think is the #1 reason traders don't get funded? I read every single comment. I'll see you in the next one.